All right, everybody. Thank you so much. Mirella, it's so great to have you here with us this evening. I can't wait to go through the presentation with you. Welcome,
Thank
everybody.
you.
And, we get so many questions asked all the time about this topic. Parents are just so nervous about the next generation purchasing homes. So we just thought, Mirella and I, that we would collaborate and bring some information to you to help you with your children and even with yourselves if you wanted to purchase your next property. So let's start by introducing ourselves. I would love to introduce you to Mirella Canavan. And Mirella's joined her husband, Mike, in real estate in 2019. And they formed Canavan Real Estate Group with Remax Realty Specialists. And within their 21 years of marriage, family and home has always been important to them. So they help families go from being obsessed with the MLS and stressed about buying and selling their homes to slowing down and believing in the process. With their over a decade of experience, personalized marketing plan, kick-ass negotiation skills, and a strong work ethic, they always ensure that their clients' real estate experience is a positive one. I can attest to that. They truly understand busy families. Their mission is to help clients make the best financial decisions for their family and their home. Mirella was awarded a gold for best real estate agent in 2021. Congratulations. And in 2022, platinum for best family business for Mississauga New Reader's Choice Award. Congratulations again on that. They truly feel that they are an extension of your family.
Yeah, so I've known Angie for quite a while now, and it's my pleasure to collaborate on this webinar with her. And Angie is an accomplished mortgage broker. She's got over 15 years of experience in the mortgage industry, working alongside her daughter, Victoria, as the Pettyjohn team. And Angie strives to work for her clients, not the banks. So let's repeat that: for the clients and not the banks, in providing unbiased guidance in their mortgage decisions and achieving their real estate goals, because that's exactly what we're here to do. Her focus is on assisting a wide range of clients, from first-time home buyers to complicated real estate investor portfolios, and to provide them with best options for their personal financial needs. So I am thrilled to be here tonight, accompanied by Angie, and hopefully this webinar provides value to our viewers. Okay, so let's get started, everyone. You will receive a copy of the recording. So following this webinar, you will receive an email with the recording, as well as additional free resources for you to utilize as well. So today we're going to discuss generational wealth. What is that exactly? First-time home buying, down payment versus co-signing, home buying then and now, and we'll end off with questions and answers. So with this webinar, we definitely want you to feel empowered to make positive, long-lasting decisions for your wealth building dreams. So important.
Awesome. So when we're looking at planning for generational wealth, there's really three main things we want to consider. One is passing on our knowledge. Another one is having those hard discussions, and then preventing mistakes from repeating. So I really wanted to dive into each one. So let's go into passing on knowledge. And, building generational wealth starts with the transfer of knowledge. So, for example, Victoria and my business partner, she's also my daughter. And I've learned a ton from her. A few years back, she and her boyfriend purchased a property, and it was a triplex. And, I, as a mom, was terrified for them. I have these discussions with clients all the time. But, they ended up purchasing something, and they lived in the smallest unit, and their mortgage payment was being paid for by the two tenants below. The largest unit was occupied by family. Then they had a couple in the basement. And, that taught me something, rather than just the information of me going, all right, Victoria, this is what you need to do. Put 10% down, put 10% of your income aside all the time. We're constantly talking to ourselves, to each other. Sometimes I talk to myself. But
You do?
yeah. And we really believe in this, of passing on knowledge back and forth to each other. Now, the other one is have you had that money talk? We always talk about the S word. Have you had the S talk? But this is like the money talk. This is the true, meat and potatoes of everything. And if I look back at my family, my gosh, my mom and dad never told us anything. We didn't know what my dad even did, like how much he made. And we didn't know what was in their bank. We're pretty open with our kids with, where we bank, just in case anything can happen, right? And having those serious conversations about money. Don't make it a taboo. Let's break that stigma. And I'm hoping that by having these webinars that we can encourage parents and their children and vice versa to talk to each other about money, because it's not a bad thing. There's the abundance in this world is unbelievable. Yet we choose to look at things with the glass half empty, and we have these horrible connections to money. So let's break that stigma and have these wonderful conversations about it. And sharing your mistakes. So while you're talking, there's also some mistakes that we can share with each other. Let's not hide those. For example, several years ago, maybe 8-9 years ago, I made a horrible investment decision, and it cost our family quite a bit of our RSP money. And I've learned from that. And I talk a lot about this when I talk to my clients about private lending, especially, and why I've become so strict with my guidelines. And it's because I come from a place of where we lost money, right? And so if I can provide that type of information to my children, I think that makes them much wiser. So share the mistakes. Don't be embarrassed about it. And, I actually was very embarrassed, but when they were old enough to understand what happened, once I freed myself, because it is a freedom of once you unleash this, it felt just very empowering, and it felt fantastic. And I've turned the corner now, and now I talk about it all the time with my private lending clients.
Okay, so first time home buying, we're going to talk about, the standard path, new reality, and also creating alternatives, because trust me, there are many that are out there. The standard path, we know this from a lot of generations, especially the older ones, where you buy a principal residence as your first home with 5% to 20% down payment. You're able to buy where you want. So if you wanted that house in Toronto or in the big city, you want to work, you want to live close to work, and also with what you can afford, though, right? The new reality is that due to legislative changes, and as we've seen, the competitive markets that have happened throughout, let's even just say the last 5 years, not only just during the pandemic, that's definitely changed the scope of first-time home buyers. The lack of savings, hey, we know that, earlier this year, romaine lettuce was $9, so there isn't that much of savings, let's say, and last year as well with the rising interest rates, we have a new reality for some, okay, some first-time home buyers. So more and more home buyers are looking to what we call house hack and are moving away from the standard path. So just had Angie had mentioned, house hacking is a term that's used to describe, it's basically a strategy for reducing costs by purchasing a property and renting out part of it to generate income. So this can involve, again, like Angie had said, a multi-unit, such as a duplex or a triplex, and living in one unit while renting out the others. Alternatively, it can also involve renting out a spare bedroom or perhaps a portion of the property while still living in the home as well. So the goal basically of house hacking is to offset or eliminate altogether the cost of housing. So you're basically freeing up money and you're then saving that to invest at a later date, right? So it can also be a smart financial strategy for those that are willing to put in the effort, maybe to manage tenants and property maintenance, but you've got that long-term goal in mind. Another great thing that I always, suggest as well is that house hacking can also be, an added benefit to building equity. Like, who doesn't like equity in a property, right? And this can be obviously beneficial in the long run. And we're going to talk about that a little bit later as well. So you basically have to be careful and carefully consider the financial and lifestyle implications of house hacking, let's say, before deciding if it is the right strategy for you.
Oh, that's me.
Yes.
I was enjoying what you were saying there. So now we ask, like, how can you, the parent, or help this next generation? So, we're all terrified, as I said earlier, worrying that our kids are not going to be able to afford a home. And there's really a couple of ways. One is you can become a co-signer. So when you become a co-signer, what that means is you're essentially liable for that mortgage. You're signing on as an applicant. You can assist by increasing that buying power, but I caution the kids of this transaction on this, where I don't want mom and dad to be the ones to really elevate that mortgage to a point where the kids can't pay for it themselves. It still has to be manageable for them. So I always ask them to do their budget first. And then I talk to them about co-signing. You know why, Mirella? Because sometimes, sometimes the applicants come to us and think, well, my parents, I'll be able to buy, that $900,000 property, and their mortgage is going to be $780. I don't know. I just chose that number. Can they afford the payment on $780, or can they only afford $500? So if they could only afford $500, or their budget is telling me they only want a $500,000 mortgage, well, adding that extra, $280 on the mortgage is not really going to help them here. But what the bank likes to see, because they're first-time home buyers, the strength of the whole application with mom and dad in there. It's more security, right? Because the parents add more value to the application. And what you have to be careful of as a co-signer here is that this mortgage will impact your credit bureau. You will be on the mortgage. Okay. There is a guarantor, and years ago that we used to use this often, and very, very few banks allow a guarantor, which means you're not on the mortgage. Most banks that we see, you must be a co-signer on it. So therefore, it does show up on your bureau. And if the kids miss payments, that will impact you. So that's a caution here, right? And let's say you're in the market to continue buying yourselves. Well, it will limit your personal borrowing power. So yes, they're paying for the mortgage. So if anything goes wrong, you're still liable 100%. You can set this co-signing up. So a lot of clients are asking me about, capital gains here. You can set it up where you're just 1% owner, but you're 100% liable for those payments. So you have to be very careful here. And again, you are 100% affected on the when you want to borrow money yourself. So this may impact you here. Another way is by gifting your down payment, by gifting the down payment. And this comes in all sorts of ways when we get into this later on. What kinds of what sources can you use for your gift? And you're essentially providing the money. So you're not on title whatsoever, but you provide them with this a down payment gift or even closing costs. I've seen that, or I've also seen where you're paying off some credit cards so that your children can get into the market. So we're not taking into account liabilities like credit card bills and such. So what can you use as a down payment? This goes, obviously cash, right? You use your cash. Oftentimes I see parents using their line of credit. So I find in my generation, so I'm in my 50s, I find my generation, we don't want to have a line of credit. We want to pay off our mortgage, but this is the goal. The secured line of credit is the gold. If you've got a property and it doesn't have a mortgage on it, you can open up a line of credit. It's great for emergency purposes, but it's also helps in this kind of instance where you can gift your children a gift, right? So RSP, and let me just clarify here, RSP is not the parent lending RSP, their RSP. It's the actual client with their RSP. Your first time home buyer, you could use up to $35,000 in your RSPs, and then you have 15 years to pay that back, or your TFSA. And obviously, any other kinds of investments you can pull and draw on that. And I see often at my age too, parents start to sell off some of their assets because they want to now give an inheritance, a living inheritance, and it comes from the sale of property. I've seen that as well.
Okay, so now I wanted to go over some statistics of home buying then and now. I thought it would be an eye opener as well in terms of, what was the cost, back in the day, let's say even 20 years ago, and compared to prices now. So I came up with a few scenarios. So a semi-detached, 3 bedrooms, 3 bathrooms. So when real estate agents, when we come up with pricing a home, we basically have to look at comparables that are pretty much, the exact home, other than, let's say, aesthetic finishes. So 3 bedrooms, 3 washrooms. So for example, I cannot compare a detached home to a semi-detached. A semi-detached has to be compared to a semi-detached. A 4-bedroom can't even be compared to a 3-bedroom because the cost is a little bit different. So when you're looking at a first-time home buyer, right, back in 2003, a semi-detached, was selling for $223,000. The same semi-detached, 3 bedrooms, 3 washrooms would, in February of 2023, sold for $960,000. So we're looking at, a $740,000, increase in price. And detached homes have definitely escalated as well. So a 4-bedroom, 4-bath sold in 2003 for $371. And then in February of 2023 sold for, almost 1.6 million. So that's a huge increase. And this is in Mississauga, but it could be generated in other municipalities and regions as well, and cities. And then a condo, because sometimes that's exactly what we're looking at, right? For first-time home buyers, usually they don't need that much. They literally just want to get into the housing market. So they're looking at that 1-bedroom, 1-washroom. January of 2016, let's say, you can buy a 1-bedroom, 1-bath for $209. And then, just this past month, it's already 500,000, right? A condo town, so 2 bedrooms, 3 washrooms, the exact same unit in 2015 sold for $395, and then in January of 2021 sold for $590. So definitely there is an increase of equity that has been, made pretty much in these types of homes, and it's great to actually see, especially if you've got that equity. And so that's what we're basically talking about today, is sometimes how do we use that equity in our home in order to help our children get on their feet within the real estate market. So you can say, oh my gosh, like, how did that detached home basically increase, $1.2 million, or that semi-detached increased, over 700,000? Well, mortgage rates were obviously generally higher as well 20 years ago compared to, today, compared to the last few years. Now, obviously they've gone up. Bank of Canada has, did the status quo the last two rate announcements. In the early 2000s, the interest rates on a 30-year fixed rate mortgage, let's say, were often above that 6%. We didn't have the stress tests too back then either, right? And today there's definitely other things, we've got the stress test, and there's a lot of other government imposed things that Angie can definitely talk about. Inventory. So the housing market 20 years ago had a much higher inventory of homes for sale. In the area where I live right now, there's 8,000 homes, and are you ready for this? There's only 11 homes that are for sale.
Oh my God.
So we're not even comparing apples to apples, really, right? So in recent years, there's been a shortage of available homes for sale, which has definitely driven the prices up, and it's made it more difficult, for buyers to find, suitable properties, and how we had mentioned, before, that standard path of sometimes, finding that home in the city that you actually want to live in, or close to home, perhaps maybe right now is not feasible, or it's not a good option, right? Technology, the way we buy and sell homes has definitely changed significantly over the past 20 years. People nowadays use online tools, right? They're like my bio said, a lot of people are obsessed on MLS and House Sigma and all these other, home sites and virtual tours to view homes. Whereas 20 years ago, people relied heavily, on in-person showings and pretty much private advertisements. Now we've got social media as well, which back then we didn't have any, right? Demographics, definitely huge as well. The makeup of home buyers and sellers is also, it's shifted these past 2 decades as well. Today, millennials make up a significant portions of home buyers, whereas 20 years ago, the largest group of buyers were, you know, the Generation X, let's say, or the baby boomers.
That was awesome, Mirella. It's just like mind blowing how everything has increased over the years, right?
Mhm.
And really the main issue over this last little while has been the shortage of product, right? The
Yeah.
inventory has been so extremely low. So we get to the part where we talk about like what happened. You know, your kids may be still too young to move out. They're still teenagers, right? So we often talk to our clients about purchasing a property for long term, right? Buy something now, it's an investment. So as an investment property, you do need to put 20% down on those properties. And when you're looking at it, you're looking at the growth of your 20% over time. And then you have the option, once you have a property, you rent it and you know, hopefully you're cash flowing, or if you're not flowing right now because the rates are too high, you know, you might have to put a little bit of an investment into it monthly to hold it. But then you know, later on your kids can decide, well, you know, they can move into it, or it's like that one property that's $1.5 million. Well, maybe it's time to sell it, and then you can, you know, be free of that property and give it to your children, or a portion of that as down payment to the kids later on. So this is a great strategy. So you start now, and as we've mentioned before, using the HELOC, using your equity in your own home to put that 20% down. You can double how much equity you have over the years. So it's an excellent strategy. So we really brushed through everything very, very top line here. Myself and Mirella, we're free to chat with you at any time. You know, if anything has resonated with you, we both have discovery calls with our clients. So let's chat about this. We can, you know, have go through your options with you. And you know, again, now's the time to act. You know, I often get asked this question, and I'm sure Mirella, you do as well. And that is, when is a good time to buy? Well, today is always the best. Well, yesterday was always the
Yeah.
best time to buy. The next best time is today. And that's because we just don't know what's going to happen in this world. We just lived through pandemics and wars and, you know, bank failures and all kinds of stuff in a short 3 years. And we don't know. So we will never catch that right timing. And you shouldn't be doing that. You should be buying now and letting time grow the equity for you. And that's the main thing here tonight. And as a parent, there's lots of options for you out there to help your kids just get into the market, or you can start doing that yourselves. So reach out to us. We'd like to open up for questions now. We're free for that. And we'll just take a look at our chat. So
there's
go ahead. That's
sorry,
Victoria,
so
by
there's
the way.
one question.
Yeah.
Hi. So there's one question here. It says, how can parents help their children improve their credit scores or financial readiness in order to qualify for a mortgage?
Oh, that's an awesome question. So again, we do discovery calls, and we will go through, I always say know your numbers. So the credit score is one of the biggest portion of the application. So whether you're thinking of buying today or in 2 years, let's figure out what's on that bureau. So first things first, we pull our own bureau, we look through it, and we set them on a path of how to remedy what is on there. So for example, if they're first time home buyers, mom, dad, it's not a bad thing that they have 2 or 3 credit cards, right? Good bank credit cards, you know, not Best Buy, not stuff like that, Staples. We're talking, you know, real bank type credit cards. And the strategy there is, you want to make sure that, let's say you have $1,000 limits, you want to make sure that you're not going past the $1,000. That's a big no-no, because you'll start deducting your points. You want to keep your balance below 60% of the limit. So in this instance, you want to keep it at around $600. Of course, paying it off is the best way to go. But if you had to carry a balance, make sure it's below 60%, and also never go over. So paying on time. So when our underwriters, when they look at your credit bureau, there's a bunch of ones on there that shows that you've paid on time. But if we start seeing twos, that means you're missing payments. And we could see that the exact month when you miss payment. So once they've missed payment, you start to deduct. And also the lender then gets really nervous for your credit ability. Are you going to be paying their mortgage on time? So when you're messing around and paying with credit cards, you have to remember, this is the only way a bank is going to judge you for how you're going to pay your mortgage. And if you've got several missed payments, that's a huge no-no. Another huge no-no is if you go beyond that credit limit. So don't do that. You miss lots and lots of points as well. So how do you correct it? Is sticking to the 60% rule, never go over the balance, and always pay on time. So those are the main things. And do have 2 or 3 really good credit cards that you're using and paying on and off throughout the month. So that's that. Did I miss anything else of part of that question?
No, that was awesome.
Thank you.
And I have one question for Mirella. So what can I as a parent do to help my child find the right home for their needs and their budget? And how can I support them throughout the process?
Sure, absolutely. So you know what, when we do showings, sometimes the parents do end up accompanying their children on the showings as well, and we love that too. Sometimes there can be comments going back and forth, which is totally fine as well. However, I'd love to keep the real nuts and bolts of like the bones of the property to the actual, professionals like the home inspectors, that is actually going to be doing inspections on the mechanicals and all the important things within the home. But yeah, we all want to give our children advice. Ultimately, it's obviously their own decision, because that is their investment as well. But I really like to always say that it's like that Remax commercial when that man is listening to the wall. It's behind the wall, and then it says, don't get dad advice, get an actual expert. And us, realtors, we're here to guide you through it, through the whole process, but we're also not here to, I can't inspect a home. So that's something that we always suggest within a property. And the good thing is that conditions are actually back too. So financing conditions and conditions of home inspection, sellers are not kind of, turning their eye towards them. They're actually okay if they're put into an offer. So let's just rely on the true experts within the industry.
Yeah, that's true. Mirella, you just brought up a good point. The experts, I think a really key thing to get your kids ready to go is really to start building their power team, right? So do reach out to myself and Mirella. we would be part of that power team mortgage broker, Mirella, as your realtor expert. And you know, the lawyers and your insurance broker, you do need to have professionals in place so that you're not scrambling at the last minute, right? Often we see people after they've visited a real estate agent, which is fantastic. I remember years ago, you know, no one was getting a pre-approval. And then they'd go in on a house and they'd get disappointed because, what do you mean I can't afford that house?
Yeah.
So now, you know, unfortunately, I do burst that bubble. But let's burst it ahead of time so that you're not running around and wasting your time just and getting heartbroken in the end that you can't afford that property in the meantime. So, you know, getting that power team in place and taking action with your specific power team members early enough. Like first time buyers, it could take you 2 years. Right? So let's talk about this right ahead. Let's know your numbers ahead of time so that you're not scrambling at the last minute. You know, we've had clients whereby after doing their credit check, they had no idea because they've got Credit Karma on their phone. They have no idea that there's something that's affecting them that the bank is not going to like until we do we pull their credit score, and lo and behold, there could be something there, you know. And so that in itself can take 6 months to remedy. So, you know, come to us ahead of time, engage in your professionals ahead of time, ask the questions, pick up the phone, discovery calls. We're all doing these incredible Zoom things now where, you know, now over this last 3 years, we're so readily available. It's really remarkable.
And we also welcome it as well. You know, there's so many times where people will say to me, "Oh, I didn't want to bother you," and I'm thinking, no, you know what? This is what I'm here. I'm here to answer that question. And I always say that, you know, there's no such thing as silly question. It's, you know, it's the ones that are not asked. Those are the silly questions, right? So yeah, your sphere of influence and the professionals that are here to help you, guide you throughout the entire journey. And it's literally, you know, pre, during, and after. You know, my husband Mike and I were both realtors, and so we always say that we find ourselves as being the extension of your family. Once you end up, you know, closing that home, you know, we still keep in touch with you to see how things are going, if you've got any questions, you know, and so forth throughout, you know, your life, right? So that's truly important to us.
Yeah, that's a key point also for our team too, Mirella. You know, it's not a transaction. So when you are interviewing for your mortgage broker and your real estate agent or lawyer or whatever, like you have to make sure that you're not going to be that transaction. So I'm very confident that when people contact me, that they'll see my authenticity and connect with me at a different level rather than just a transaction, because we are, like you said, we are with them along the path as well. Like engage with us. And you also brought up something really funny, and that is, you know, people calling you going, "I'm so sorry." I mean, this is literally our job. Please do not be sorry. Like message us, text us, email us. In fact, if you were to email us, you know, I have a team behind me. So if I can't answer you, one of my team members will be able to answer. So, you're not bothering us ever. We're here for you from start to finish and beyond. Right? Like things are happening in the world beyond, you know, closing that mortgage. So this is awesome. I'm just going to ask one more time, Victoria, do we have any more questions?
No, you guys pretty much covered everything that was kind of in the chat. So
okay, fantastic. So thank you, everybody. Again, you know, we do want to hear from you. We're not just saying this So I ask you to take out your phone right now and just take a picture of this, because I know you're not gonna be able to type it all down so quickly. So take a picture of this. We're available anytime. We also, as Mirella mentioned earlier, there is a recording. And Mirella, I didn't record the bio. I'm so sorry.
It's okay.
Yeah, that's what you saw earlier. I clicked on it, but it didn't record. So I apologize about that. But anyhow, you will get the recording. You'll have all our details. And we will be reaching out in this next little bit to see how you enjoyed this webinar, and we'll be doing a lot more this year. So thank you, Mirella. This has been a pleasure.
Thank you. This has
And
been great. Thank you
yeah.
so much for attending. To those out there as well, I hope that we were able to provide value to you, and perhaps maybe even, generate some